Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PNC Financial Services Group (PNC) quarterly report. The PNC Financial Services Group, Inc. offers a wide range of financial services to its customers. Some of the key businesses and services provided by the company include retail banking, checking and savings accounts, residential mortgages, auto loans, credit cards, personal and small business loans, corporate and institutional banking, secured and unsecured loans, cash management, investment management, asset-backed financing, securities underwriting, asset management group, investment planning, customized investment management, trust management, retirement plan, fiduciary investment services, additional services, plus brokerage and insurance services, plus investment and cash management solutions, plus commercial loan servicing and technology solutions, plus outsourced chief investment officer and custody services, plus multi-generational family planning services. The PNC Financial Services Group, Inc. stock price has shown minimal fluctuations over the past year, with no significant changes occurring due to various reasons. While several news events coincided with daily stock price changes of less than 0.49%, these events were largely overshadowed by other market factors or were not material enough to move the market. Notable examples include PNC's expansion into immediate payment solutions and marketing-focused events, such as a hockey-themed promotion in North Texas. These activities resulted in minimal daily fluctuations, ranging from -0.14% to -0.39%. However, attributing the lack of significant change directly to these news items is an interpretation, as many other market factors could have contributed to the stable stock performance. The PNC's third quarter 2025 earnings report on October 15, 2025, resulted in a substantial stock price drop of -3.9%, which falls outside the specified threshold for no significant change. This suggests that while various news events may have had some impact, they were not the primary cause of the stable stock performance over the past year. The primary drivers of revenue growth or decline in a company's financial performance are multifaceted. In this case, the 9% year-over-year (YoY) growth in retail banking revenue is a significant contributor to the overall revenue growth. However, the lack of explicit information on corporate and institutional banking and asset management group revenues makes it difficult to determine their impact. The company's risk management strategies, such as allocating the allowance for loan losses based on loan exposures within each business segment, are crucial in mitigating potential losses. The FTP framework, which considers interest rate and liquidity risks when determining funding charges and credits, also plays a vital role in managing risk. The performance of each business segment contributes to the overall financial results of the company. For instance, retail banking's growth can be attributed to various factors such as increased lending, deposit accounts, or investment management services. Conversely, a decline in revenue could be due to decreased customer activity, market fluctuations, or inefficient operations. Ultimately, understanding the drivers of revenue growth or decline requires analyzing specific metrics and trends within each business segment. By examining these factors, companies can identify areas for improvement and make informed decisions to drive future growth. Net income and profit margins. A mixed picture. The company's net income has presented a mixed picture over the past year. While it decreased by $176 million in 2025 compared to 2024, it increased by $461 million for the first 9 months of 2025. This inconsistency suggests that there may be underlying factors contributing to these fluctuations. Profit margins have also shown some variation. They declined by 1.5% in 2025, but rose by 1.1% over the same period last year. These changes indicate a shift in the company's financial performance, although the specific reasons behind them are not explicitly stated. The PNC Financial Services Group, Inc. has reported significant changes in its debt level and interest expenses over the past periods. Notably, total debt has increased from $423.27 billion to $433.8 billion, indicating a rise of approximately $10.53 billion. Conversely, interest expenses have decreased from $97.42 billion to $96.42 billion, showing a decline of about $1 billion. These changes suggest that the company's financial position is becoming more leveraged, but its interest burden is decreasing. The PNC Financial Services Group, Inc. has a history of rewarding its shareholders through both dividend payments and share repurchases. The company's commitment to returning value to its investors is evident in its decision to pay dividends and buy back shares, demonstrating its confidence in its financial performance and future prospects. That concludes the financial summary for PNC Financial Services Group, Inc. Feel free to comment below, and I will be happy to answer them when possible.